Yo, what's up guys, welcome back to another video. Today guys, we're going to talk about our made $556 today, day trading the Nasdaq and then the S&P 500. So let's go to the daily bias, let's go to the 4 hour time frame to really go through it. So in the 4 hours we have all these lows and all, bro, whatever, let's go from the start really. So before market opening we have this 4 hour bullish SMT. So as you guys can see, Nasdaq swept out. Oof, this is a bit of a mess with all the stuff, but I can clean it up. So yeah, so Nasdaq swept out these lows right here, and the S&P 500 didn't. So we created a bullish SMT right here. Not only that, we also had a strong draws on liquidity to the upside. So this was pretty, this is the session. So this is Asian session, London session. These red lines right here. So what we have is really we have London session manipulation. So London session manipulated to the downside, swept out London session lows. Not only that, we swept out these hourly lows, these hourly New York lows from yesterday, and also these New York session lows from the other day as well. So yeah, we have market open manipulation. What we want to see, New York, so pre-market manipulation, market open, reversal. That's really what we wanted to see. Not only that, we have the confluences for it because we have a bullish SMT on the S&P 500. What a lot of people ask me is, but Shuka, there's so many lows right here. Why doesn't the price want to go to it? Like the lows are here, but bro, it's the definition of SMT, even though the lows are still here. Yes, we created an SMT out of it because Nasdaq swept them out, so price does not want to go there anymore. Why? Because they've already been swept. Price now wants to go higher. And what happened next? Price went higher. And yeah, I want to take a trade on the lagging index or on Nasdaq. So, and that is exactly what I did. But yeah, so macro open. So market open, we got move up. And I was watching these on 1 minute. And my take profit one was in these hourly highs, and I was like, damn, price is already moving on these hourly highs, and my macro isn't even open yet. Like I was almost trading pre-macro, but that's not my rules. So I wrote in my notebook, I was like, okay, be patient, wait for the trades to come to you instead of you forcing the trades onto the market. That's exactly what I did. I waited, even though price already took take profit one, there were still on session highs to be taken out. So I was like, okay, be patient, and let's wait. Exactly what happened. Macro open. We sweep out these 1 minute lows. Not only that, we fill 5 minute parallel gap. Let me check. Let me go and show you guys. Not only that, we sweep out this 5 minute parallel gap. We fill it. We are filling it. Not only that, we are filling 5 minute equilibrium right here. Let me just clear this up. We don't need this. This 5 minute equilibrium up to these lows, up to these highs. This 5 minute equilibrium is getting filled. Not only that, parallel gap. So we go to 1 minute. And enter on break of structure. So as you guys can see, we swept out these 1 minute lows, 1 minute lows. So low time frame, low resistance liquidity, it's swept. We enter on break of structure of it. We get break of structure right here. So these highs on this small candle, I enter on this small candle. So a little bit here. It's actually where I entered because I didn't enter off this alone because it's not a break of structure. As you guys can see, it just just almost there, but I entered after this candle right here, got a good entry on it, stop below 1 minute lows. I actually put it below 5 minute parallel gap. I could have put it below 1 minute lows that filled parallel gap. I put it below parallel gap, whatever. But yeah, next time probably put it below 1 minute lows. It's probably safer. It's not that it is safer, but the parallel gap has already been filled, so no reason to put it below the parallel gap because it's already been filled. Yeah, then we go break of structure, boom, price moves up. 5 minute, this 5 minute highs, take profit one, get it. I close I think it was like 20% of the position. I need to do maths. It's like it was 8 contracts, so 2/8. Yeah, 25% of the position. Wow, good maths, Ruka. 25% of the position closed here, 25% closed here, and then the rest of it I closed it on I'll take profits. I entered very low risk on this trade because I messed up the risk. Not why, I'll explain it to you. Because I also got a trade on S&P 500, and it was very last minute, so I needed not only to make sure my risk was right, because it was very last minute, I need to get in on the trade, but also I needed to split the risk so that I wouldn't be risking too much on both trades. So I needed to split the risk that I was going to spend for the day in both trades. And with that, I ended up dividing way too much the values, and then I got lower risk than what I wanted to, but I still got a banger trade. With the risk that I got was like super good. Like it was $100 here, and it was like 200 here, I think, or maybe it was even less. I think it was even less the risk. Like the risk was super low. on both trades. And then yeah, here exact same thing. The setup on Nasdaq on ES was actually looking better because we also we had these 1 hour highs and these 1 hour highs still, and these 1 session highs, you know, to get swept. But like I wasn't being greedy at all. Like this will be the goal. But like, ooh, this would have been a bigger trade. But I was like, up to these 1 hour highs was good enough for me, and it was a good risk reward ratio as well. So yeah, we go to 1 minute again. We feel. Let me clean this up. We feel 5 minute equilibrium, but let me just check if this is needed or not. Yeah, much cleaner. Why? Because we feel not only we feel. Yeah, let me take this out. Yeah, we feel this 5 minute equilibrium. Up to these lows, up to these highs. Right here, this I think it's 15 minute equilibrium actually. Yep, 15 minute equilibrium. We go to 1 minute. We wait for a break of structure in the seller gap, whatever it is. We get a break of structure right here. So we have these highs. This is a high. But no, this is a high. We got break of structure in on that. Stop loss below these 1 minute lows that fill equilibrium, and then boom, take profit one in these 5 minute highs or hourly highs. I think it's hourly highs, if I'm not wrong. Nope, it's 5 minute highs, and then take profit one on this. Take profit two on these hourly highs. Now this is a hourly high. Yep. And yeah, you know, it was actually it's a 30-minute high, not an hourly high, because you know, yeah. But it is what it is, you know. For me, it's almost like a hourly high. Yeah, price hits both take profits, also fills this for 1 hour further gap, and then goes up and hits London session high. So very good trade. What could have done better? Really, you know, the only thing I could have done better was not mess up the risk. And the other thing as well is that I could have put to London session highs, but like with the risk that I had, which was super low, like London session to get them to London session highs will not be, you know, yeah, it's just super low risk. So you know, it will, you know, I just wanted to close the trade. I also needed to go out as well. So yeah, not a bad trade, good trade today. Good trade on both indexes as well. Here, you know, good trade as well. Closed it correctly as well, managed well. Just a shame I didn't put much risk on the table, but you know, good day today. We're back at winning days. Yesterday we had a win, but you know, we did break even after it take profit one. Today read correctly the buyers, manipulation and everything, and yeah, tomorrow hopefully we get a good day. We get news on, we have US bank holiday on Friday, and we have news pre-market tomorrow, so hopefully we get a good day. And we also have news at 10. I hate news at 10, bro. Yeah, we gotta wait until news comes out. Yep. So yeah, it is what it is. We have to wait till 10. It's a shame. I don't really like waiting, and I don't like trading pre-news as well. So yeah, we'll wait. We'll get news, and then we'll see from there what we'll do. It's the best decision. But yeah, good trade today. Hopefully tomorrow we can get a good day as well. Hopefully get closer to passing the funded accounts, which we are currently doing, you know, pretty well. And yeah, this is just what should have been, you know. I learned so much last week again, and last month, you know, so many mistakes I did. You guys watched them all, you know, all the mistakes, and now, you know, really coming together, you know, the mistakes, learn from it for sure, and now moving on from mistakes and keep improving, because trading is about losses as well, you know. Losses make you a much better trader, and that's really the reality of trading, is that you cannot see losses as a bad thing. In fact, you should encourage losses. Not that you should be always losing, but you know, when you lose in these markets, you gotta be like, okay, I lost. Why did I lose? Learn from it and never do that mistake again. You need to do that, and if you are able to do that, you're going to be pretty successful in trading. That's really about it. You know, trading is about learning from mistakes, adapting to the market conditions, risk management, psychology for sure, and strategy. You know. But you know, if you can learn from, if you can coach yourself, you know, like, okay, I don't want to do, I'm making these mistakes, I need not to do mistakes, you know, be self-critical, because if you think you are perfect, you're not going to improve. But if you say, I'm not perfect, I need to improve, I'm always needing to improve, bro, there are traders trading for more than 10 years, they are still learning things every single day, bro. So if they are, you should be too, especially when you lose. You know, especially when you lose, it's very rare that you lose because it's your strategy fault. It's more like you didn't read the liquidity, the draws on liquidity right, you didn't have your bias right, you made the execution mistakes, like you marked the confluences wrong or something. That's really why you lose, not because of the strategy. In fact, you will lose way less from strategy, like you know, your strategy doesn't have a 100% win rate. You know, there will be losses for sure. But, you know, minimizing that is the thing that you want to do, you know. And, yeah, that's really the ideal thing, you know. But, you know, when you lose, 99% of times it will be your fault, not the strategy fault. It will be your fault, but there are times that you lose and it's the strategy fault, yes. But the majority of times it will be your fault, so you need to be self-critical with it and say, okay, I lost, why did I lose? You know, I did, you guys saw me doing that. All week recaps, you know, like last week, on Monday even, not on Monday, but last week, you know, I lost. I told you why. This week, again, same mess. So yeah, you know, yeah, just happy with it. Good day today. And yeah, just a shame I didn't risk more, you know, I messed up the risk, but yeah, looking forward for tomorrow. Let's see what tomorrow brings us to the market. We have news at 10. A shame, I don't like news at 10, but yeah, we gotta wait and then we trade after the news as always. So yeah, hope you guys enjoyed the video. If you did, make sure to leave a like, and yeah, I'll see you guys on the next one. Bye bye guys.